What's going on, you guys? Charles here from the Traders Corner. In this video, Daniel's going to be taking y'all through basically a section of our Advanced Divergence course where he talks about divergence. So I hope you guys enjoy it, hope it provides some value. If you enjoy the video, you want to check out some more, check out the link in the description below to our Advanced Divergence course. I think you guys will really appreciate it.
Welcome back to the TTC Advanced Divergence course. What's up, guys? Welcome back to the TTC Advanced Divergence course, and in this video we're going to be covering divergence. So in a nutshell, divergence is basically when price action and an indicator that you are using to follow price action, they are doing two different things, right? So for example, price action could be rising, like price action is here, and the indicator would be falling, and then that would tell you that it is divergent. They are telling you two different things. There are two different stories on what price is doing, and that is when you have divergence, right? So as a quick example, let me just draw this. So let's say this white line up here is representing the price action, and this line down here is representing the indicator that we're using to track price action. I know they're ugly, guys, can't draw, it's alright. Clearly you can see that the indicator right here is rising, and this indicator right here, this price action up here is falling, right? It is creating lower lows, lower low, lower low, lower low, lower low, lower low. While this is creating higher lows, higher low, higher low, higher low, higher low, higher low, right? So this would be an example of bullish divergence, because this would be a bullish signal, signaling that although price action right now is falling, it is likely to reverse, because that is the story that our indicator is telling us, right? And just as a quick tip, divergence doesn't necessarily mean that, right, for example, right here, price action is falling. It doesn't necessarily mean that because now we have bullish divergence that price is going to just suddenly skyrocket and go up. No, that's not what divergence means. Divergence just means that price is likely to change. It doesn't have to, but it is likely that price will change. So right now it is trending downwards, and since it's trending downwards, there's one of three things that can happen. Price can reverse and go to the upside. Price can continue to go to the downside, or price can just start trading within a range, right? So like I said before, divergence doesn't just mean that one thing's going to happen when price is falling and you have bullish divergence. It doesn't just mean that price is going to reverse and you just buy that and then price is going to go up. It just means that there is likely something going to change with price, right? So if it's coming down, it could just start trading into a range. It could keep going down, or it couldn't go up. All these are possibilities in the market, and we never know as traders what is going to happen. We just try to play our edge. So, like I said, this would be an example of bullish divergence, and this would be an example of bearish divergence, right? Price action is rising. That's ugly, but the indicator is falling. Now let me draw a better one, because that's pretty terrible. So here, price action is rising, and our indicator is falling. So this would be an example of bearish divergence, because price is likely to change from moving in an upward direction, because we have this indicator down here telling us that well, our indicator is not telling us anything. It is showing us that the market right now is divergent, and with that means that something is likely to change. So now if we look here at the price action on the chart and we add in the RSI indicator, so this is going to be our indicator of choice. This is going to be the indicator that we use to track whether or not price is divergent or not. So if I take price back just a little bit to about here, you can see that the market is clearly in an uptrend. From about this point on, the market is clearly just in an uptrend. And if you look here on the RSI, from this point on, it's in a downtrend. So from there to roughly there, and here to roughly there, right? So this high on the RSI we would refer to this as overbought because it is over this dotted line, and that when the RSI is above this dotted line, it's considered to be overbought, and likewise when it is below this dotted line down here, it is considered to be oversold. So overbought just means that the price is overvalued and it should likely turn around, and the same with oversold. Price is undervalued and likely should start moving should start moving upwards, right? So as we see here, price is divergent. Right, we have rising price action up here and our falling RSI down here, and it just means something is likely to happen. It doesn't have to, but something is likely to happen. So if we let this play for a little bit, as you can see down here on the RSI, our trend line tracking our downtrend on the RSI is broken. So at this point, this is no longer divergent, right? Because if I redraw this trend line to track the RSI, this and price are doing the exact same thing. They're both in an uptrend, right? So now that's confluence. There's no more divergence. That is a confirmation that they're both doing the same thing. So there's nothing to worry about, nothing to change, right? We let this play a little bit longer. And as you can see, price action is rising while the while the RSI down here is falling. And because of that, now we have divergence. Right? So price action is rising, right? RSI is falling. So let's just throw on this risk reward tool just to track, let's say I would put my stop around there and aim for something around there. Let's just see what price does. And boom, take profit was smashed, right? So this is just an example of divergence and a way that you can utilize it to enter and exit trades. We'll definitely dive more into it in the next section on how you can build rules around a strategy like this. yeah, that's basically the concept of divergence. Catch you guys in the next one.